Hey there, I'm Scott Welsh. Welcome to the weekly video about beating the market. Now, we're going to talk about how to turn a losing trade into a profitable trade, and that's pretty exciting. But even more exciting, surprise, it's Thursday. Now, if you are a regular to this channel, like millions all over the world, you know that we started on Thursdays. Why Thursdays? I don't know. That's just where we started, and we got into a rhythm, and it was fantastic. Then we switched to Wednesdays. Why did we do that? Because we wanted to back up the weekly newsletter, which started on Wednesdays, and we talk about something in newsletter and then talk about it on YouTube. Those days are over. I got tired. Even though we didn't really repeat it word for word, I want Thursdays to be whatever I want it to be. So if there's something in the newsletters, and of course they're free and you should subscribe, but if there's something in the newsletter we need to talk about, we will. But I'm freeing up YouTube to talk about whatever I want. I felt too confined, too constricted. Those days are over. We're back on Thursdays. It'll be every Thursday now going forward until I change my mind again. But I'm not going to change my mind again, although I might change my mind. 3 things today. Number 1, drawdown is the worst, right? We're going to talk about that. Number 2, but when you're in drawdown, how can you be proactive when you're in that troubling drawdown? And number 3, how much lemonade could we have made from the lemons that a previous trade gave us? Now, we talked about it before. We've had, well, you'll see. I don't want to spoil it. Disclaimer, please. These are hypothetical situations, hypothetical numbers, and don't risk money you can't afford to lose. Now, drawdown is terrible. I think it's the number 1 reason why people stop trading. Because of drawdown. You lose a couple trades and you quit. When you quit, you don't win. Why do you quit? You lose. Oh, losing equals drawdown. People quit. Or you get in a situation where you're a buy and hold investor, and then 2008 happens and it goes down 50%, and then you decide not to be a buy and hold investor anymore. You never get back in the market. What caused you to leave the market? Drawdown. Drawdown is terrible. It's the number 1 thing. Now, drawdown comes in 2 forms, as I kind of alluded to. Number 1 is when you're in a trading system, you have a stop loss and boom, boom, you lose. You go on a 3 trade losing streak. That's awful. There's a stop loss. Your loss is capped. You're controlling your risk. You're being a responsible trader, but it's still going to lose. Market conditions change. That's the way it goes. So that's a drawdown. Even though you're not sitting there in the market, you trade on Tuesday, you lose, trade on Wednesday, you lose, blah, blah, blah. All right. I feel that drawdown's bad. I feel it's way worse when you don't have a stop loss in place. When you're in a trade and you're losing and there is no end date and there is no end stop. I've been there. I've done it discretionarily, and it's horrible. I don't like drawdown, period. Neither do you. But for me, it's way worse. Trades can go on, and it's terrible. It is even worse when your trade sizes are high. Am I right? Am I right? Now, we talked about several months ago a dollar Canadian fair value trade. And of course, the fair value system means you're trading back to fair value. Huh, that makes sense. But it also does not have stop losses. It's the one system I talk about that does not have a program stop loss. Well, you could make one, but that's beside the point. This one did not have it. Now, we had that trade. We talked about it, worked out, life went on. There's been a new development very, very recently. That's why we're talking about it today. Now, here's a quick reminder of the story. Dollar Canadian is one of 5, count them, 5 pairs in the fair value system. Again, the only system that doesn't have stop losses, right? Trade sizes are small, so you trade 5 to try to make some more money. Now, what does the system do? Well, you can find out, go on my website, but I'll tell you, it waits for extremes. It waits for price. We only trade long in this portfolio. That's strange. No, it isn't. But anyway, we wait for it to go down, down, down because we're going long, and then we trade it back to fair value. Everything comes back to fair value. We wait for extremes. Chances are it'll come back to fair value, and there's our system. Go for a small target, and we try to never lose a series of trades. So if we allow ourselves 4 trades, we allow ourselves to get in 4 times. By the time we're in all 4 of those, we're not getting out until we've made at least a little bit of profit. Ergo, you never, ever lose. That's the fun of this system. You lose individual trades, you don't lose series of trades. Okay, moving on. On 6/28/2017, the dollar Canadian took 4 trades. It's allowed 4, it took 4. Right, that's all it's allowed in this particular system, and it went the wrong way. It went down into drawdown, and it stayed there and stayed there and stayed there, and 6 months later, it was still there and beyond. It was not fun to look at. I was not in this trade. The fair value, I trade the Aussie yen on fair value. I did not trade this. I did not trade all 5. So there's your hypothetical numbers, people, that we disclaimed in the beginning. But nonetheless, I watch it as if it's mine because all my systems are deeply important to me. Okay, so that happened, and we did some videos. I put some videos in the fair value course, and I did videos online on YouTube. Now, while this is going on, of course, if you're trading a portfolio, your other portfolio members are making money, and that ostensibly could have been happening. The 4 other people in the portfolio are making little chunks of money along the way. Now, this drawdown was pretty gargantuan. Gargantuan? Gargantuan. What is gargantuan? This drawdown was very, very big according to the historical testing. It was either the most or nearly the most at the time I did the videos. So yes, there would have been winners, but that would not have paid for the drawdown. So that's why it was bad. So there were choices. When you get into drawdown, yes, it feels hopeless, but you still have choices. And in the previous videos discussion, we laid out some scenarios that we could have partaken in. Things we could have done, right? Things that would have turned out to be very profitable. And let's go to the charts, and I warn you, for sure, it's not going to match up exactly on my screen, but I'll quickly make it match up, right? I didn't want to show a still shot. I wanted to get to the charts. Okay? Okay. So let's make this match up to our screen a little bit better so we can see it's already confusing enough, right? Let me stretch this out. And that should be good on your screen, right? Let me know. Oh, no, it's not. Now it is. Okay, there we go. Sorry for that momentary delay. Now, this dotted line here was when the trade was taken. Now, these trades are taken on 15-minute charts. So this is the big picture. It's a daily chart. This is exactly when it happened. You can see that price was fairly extreme, even on a daily chart. This is a Bollinger Band. This Bollinger Band is not the same as it is in the system. This is only a 120 period Bollinger Band. See, 120. Can you see it there? Cancel. Why is it set to 120? Well, I'll tell you. Thanks for asking. The daily charts, I like between 100 and 200 length on daily charts. That shows a very nice extreme number. Why 120? That's just the way it is. It's what I like for dollar Canadian. Use that as you will. Now, I'm going to stretch that out. Can I stretch that out a little bit more? Do you care? All right, I'm not going to. So here it is. That's when we took the trade. Now, we talked about choices. This is my friend Rob Booker's Knoxville divergence. He made it for TradeStation, of course, and there it is. You could have waited, right? I'm in trouble here, and then all this happened. You could have potentially decided to get in when you saw some sort of divergence indicator, if you have it. You could have, well, then it rose. So, it's going to get back to fair value. And then a massive fall down. You could have waited till after the second divergence and gotten in somewhere here. That would have been a nice entry because you can see, look at all the space back to the middle of the Bollinger Band, which is kind of a proxy for fair value. Not exactly, but, you know, would have been a nice trade here. Look at that. Boom, right back. This was a period of time, right? This was July, August, September, 1, 2. We've been in the trade 2 months. Maybe we want to take some action. These blue lines are weekly pivots. That might come into play in a moment. What's interesting here is, if we just fast forward a little bit, here are choices. And here, in this ellipse over here, if you did nothing, this was where the trade actually would have exited on a 15-minute chart for profit. So you would have had to deal with all that, and you can see now we're past March, we're into April. That's a lot of months. all the way into the new year, but you would have ended profitably. So you could have done nothing. Oh, but look, what if you would have gotten out of divergence? That is kind of at 2400, right? Somewhere in here. If you waited for after divergence, this is 2200, somewhere in here. You could have, ooh, it's outside the Bollinger Band. I'm going to get in when it gets back in. Would have worked out super nicely, right? Entering here, stopping here, the nice space. But you also would have did with this. So now you've got an extra position. You've got exaggerated drawdown. But if this was, I'm not in it that long. You know, I can wait. But say, this is serious. And you got in here. Well, that's that 2200 level. And that would have been a massive run up. Just one more tiny position would have given us a huge amount of money. So let's go back to the slides real quick. Okay. Here are some choices, right? You could have done nothing. As I said, it would have been fine, but we were in a historically bad drawdown. And as I mentioned, one more position. Those two areas, somewhere, based on some methodology, I gave you a couple, you get in there, all right? So you saw now the end of the trade. Let's go back. There you go once again. See what I'm saying? Entering here would have added a whole lot of money. Sorry if I keep switching, but this is exciting, okay? If we would have added one entry and just got it out at the take profit, meaning the take profit from our original trade, the moment on our original series of trades when we just made a small amount of money. If we got out at the first one, you know what that was? 2,400, we would have made 600 bucks. If we got out at the second one, if we waited and just got back to entry, right, we would have made even more than that. Let's show that, okay? Let's show that. If we added a position in the 2,400 level, we would have made profit here, right? But this level is about 330, 35. So 2,400 to there, roughly 600 pips. You're doing $1 a pip, 600 bucks, plus the take profit on this, which is about 10 bucks, right? This system is for small accounts. Larger account, you could obviously make that bigger. So I got in this trade, this system, on a small account using 0.1 lots, just going for, I think, $8 to $10. That's all I want. This would have been 600 bucks plus the $8 to $10, just if we would have added one more. If we do the Bollinger Band, or we could have used Rob Booker Knoxville Divergence, that would have added 2,200. That would have added 800 bucks. And we've kind of talked about that before. Oh, let's give you one more. Get out the percent B. See that percent B indicator? Set it to the Bollinger Band of 120. That's what they're set at. And wait for it to go way below zero, way extreme, which you can see here on my screen. Can you? Yes, right there. Aha. If it gets down below, look at that. We're down below zero. Wait for it to get down below, I don't know, -10, -20, something that you determined, at least below zero. You could have entered right here and used that as a barometer, and you would have entered in the 2,600, and that would have gotten you maybe 400 extra dollars. Okay, but that's not all. Okay, this is the recent development. That's old news. Another thing we could have done is look back. Let's look back and let's extrapolate out. Remember, this was the day I got in. This was the level I got in. Just a few days before, we finished a missed weekly pivot. Again, I learned about this from my friend Rob Booker. He loves weekly pivots, and he should. It's a good thing to use in your trading. Okay? So, this was actually based on the system I originally used to make my trading profits. See that? So that was what me and Jill traded. Isn't that cool? Anyway, who cares about that? Weekly pivot miss right here. Okay, we started here. There's a weekly pivot miss there too, but well, we can talk about that in a moment. That's not that much more money. Ha ha ha. There was one up here. Missed, never touched. Price never touched it. Do you know what happens when it never touches the weekly pivot? It's drawn back to it. Oh, but if we look back, guess what? There was another weekly pivot at this level. Oh, and if we go back even further, there was another missed weekly pivot there. Those were the only ones. We could have done a couple things. Stayed in our original trade, but say, listen, I'm going to get paid for my trouble. I'm not getting out when I get to profit. I'm going to wait for one of these weekly pivots to get hit, even if it takes longer. And look what has recently happened, okay? Here's where I got out and I made the videos. These were still there looming. Obviously, this one was too. I didn't even put this on the chart, but right above, it got that missed weekly pivot in that area. So that was over. But you could have said, now, I don't know how you could have gone through 6, 7, 8 months of trading, finally get into profit and say, screw it, I'm going for more. But maybe you've got other things going on. Maybe you're a long-term investor and you said, just like I mentioned, heck with all this noise. If I'm going to be in it this long, I'm going to make some money. So we wait. Price goes down. You're the biggest idiot of all time. Price comes back up. I might want to start getting out here or here or here. No, I'm waiting. I want to get paid for this stupid trade. Boom. 32.60. Let's go back. If we waited for the first missed weekly pivot instead of getting out when we were in profit, that's an extra 800. Right? And this is entry one. This is getting in at 2400. This is getting in at the first Knoxville divergence or the first Bollinger Band or something along those lines. We get in there and we wait for the first missed pivot. That's an extra 800. If we wait for the second, 1,000. Remember, I'm going for 8 to 10 bucks. Do you see what? This is humongous winnings. If you don't think that's much money, add some zeros to it. Add some account size, add some zeros. If we wait for the second one, we get an extra 1,000 on this trade. If we wait for the third, who would do that? It's 1180. Let's go back real quick. So we hit here. Well, there's still 2 outstanding missed weekly pivots. You want to wait? Maybe move it to break even? No, you shouldn't have, because then it would have hit. No, we're going to be bold. Holy macaroni. This is 2019 now. It just hit number 2 and it just hit number 3. And look, no hanging out weekly pivots, overhanging weekly pivots, whatever I'm trying to say. And it immediately, once it did its job, it immediately dropped. But it hit them all. It did it. There's no other upward targets. Yes, it would have taken many more months. Maybe we would have had to wait all of 2018. No doubt about it. We would have. But we would have made an extra 1,180. Think about this. If we're trying to make 8 or 10 bucks a trade, this is equivalent to 147 winning trades. So you got a choice. Try to take 147 winning trades, or try to take something that's sour, something that's lemony, and turning into lemonade, right? Now, if we entered at entry 2, remember what that is? If we would have not gotten in right away and waited for something in this level down at the Bollinger Band or after the next Rob Booker Knoxville divergence, see this? And we waited that out. We're talking about first weekly pivot 1,000, second 1,200, and the third one 1,380, which is approximately 172 winning trades. Think about this. You know how many times this system trades in a year? Of course you don't. About 30. See what I'm saying? Yes, we would have waited a year and a half, but we would have gotten paid on almost 5 years of trading or more. This one winning trade, if we would have waited for this level, could have potentially produced multiple years of profits. That's pretty cool, huh? That is the benefit of no stop trading. If you call going through all that a benefit, right? But since it just hit those weekly pivots, I thought it was about time for us to talk about it. Bottom line is this: no stop trading is scary. Did you see all those scary things on the screen? So many rises, so many falls. There is a chance to lose it all. There's nobody promising it's going to come up and hit those weekly pivots, or nobody's promising necessarily that it's not going to go down and wipe out your whole account. But no stop trading, as I mentioned, is also the only type of trading you can do something like this. A trading system that you're using, even a trend following one, can't turn lemons into lemonade like this. You get into a no stop system that has a legitimate upward or lower target. You can do things like this. This is the potential. This is how movies are made. This is how trades like are in The Big Short are made. When you get into trouble and you see the profit opportunity and you go for it, right? You need to be smart on your entry. You can't get in too soon. You have to have a reason to re-enter and add positions. You better have a high confidence target, and you better be patient. I mean, this took 18 months, right? 12 plus 6 months. But the rewards, obviously, hopefully, can be substantial. So I thought that was pretty cool. And I was excited to share it with you today. YouTube channel's changing back again, right? We're back on Thursdays. So hopefully that's okay with you. Let me know if it's not. There's the contact information. That's all. We'll be back next week on Thursdays. That was fun. Bye for now.